Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, thank you for watching this video presentation. Before I begin, let me introduce myself. My name is Fitrianisia Uta with ID number 2023 30067. In this presentation, I will discuss three main points, namely understanding, types, and stake in the accounting cycle for the next few minutes. For friends who later want to ask questions can be submitted in the comment option after the material presentation is complete. Before we start, I want to tell friends that this material is quite important for all of. So, I want my friends to continue to listen and understand the brief material that I will bring up. Now, let's get started. As you can see on the screen, our topic today is about the accounting cycle. Friends, ever heard of the accounting cycle? Yes, the accounting cycle can be likened to the activities of an accountant in collecting data and then processing it methodically within a certain period of time. The accounting cycle in a company has a very important role. Even so, many companies ignore it. So, what exactly in the accounting cycle and what are its stakes? Let's take a look at the following brief explanation. Firstly, I will discuss the definition of the accounting cycle. What is the accounting cycle? Briefly, you need to know if the cycle is a continuous rotation. From this, it can be interpreted that the accounting cycle is accounting action in a company within a certain period of time, usually one calendar year. Okay, next. I will discuss about types of the accounting cycle because after understanding what the accounting cycle is, next is it is necessary to know that there are three types of accounting cycle. Namely, the first is the accounting cycle of service company. Service companies are companies whose activities provide various services such as convenience, security, and other to the people who need them. The activities of service companies usually always help other people or other entities by receiving compensation. This type of company earns profit from service revenue minus business expenses. For example, workshop, salon, and assurance companies. Furthermore, the second accounting cycle of trading company. A trading company is a company whose main activity is the purchase a trade item which will then be resold to consumer without changing its shape or state. In other words, the business activities of trading company do not carry out the production process. For example, building store, supermarkets, bookstore, and so on. And finally, the accounting cycle of a manufacturing company. A manufacturing company is a company whose main activity is process raw materials into semi-finished or finished goods. Goods that have been processed are then sold through distributor. For example, textile and clothing factoring, food and beverage factories, electronic manufacture, and others. Okay, next I will discuss about stake of the accounting cycle. When talking about the stake in the accounting cycle, obviously relate to every activity in accounting. Look at the following explanation of the accounting cycle. 1. Analyzing transaction. The first step of accounting cycle is to observe every transaction that occurs in one period in an entity business unit. This observation aims to find transactions that have a major effect on the finance of the entity or business unit. 2. According transaction. The next step of the accounting cycle is to record transactions that have been analyzed previously according to the date of the transaction into a journal. 3. Creating a ledger. In this test, transactions previously arranged in the journal are transferred to the ledger. The transfer is adjusted to the list of the ledger account arrangements. 4. Creating a balance sheet. The first step is to create a trial balance. Just like before, the balance entered into the ledger are transferred back to the balance sheet to see the balance between the debit and credits. 5. Making adjustment journal. The adjusting journal is made to see any unrecorded transaction at the end of the accounting period or other transaction that need to be adjusted. For example, there is a calculation error in the purchase of equipment. 6. Make balance sheet after adjustment. In the sixth step, accountants need to create a trial balance whose balances have been adjusted in the adjusting journal. 7. Creating financial statement. After seeing the result of the trial balance after adjustment, the accounting cycle continues with financial statements showing profit and loss, change in capital, cash flow, and balance sheet. 8. Making a closing journal. The last step of the accounting cycle in the creation of a closing journal. The function of the closing journal is to close nominal accounts such as income, expenses, and dividends to zero. Conclusion. Finally, we have come to the end of today's presentation and can conclude from several important points that have been discussed, such as the importance of the accounting cycle in a company that lasts for one calendar year, which aim to record, classify, and present the company financial information. The steps in the accounting cycle include analyzing transaction, recording transaction, making ledgers, making trial balance, making adjusting journals, making trial balance after adjustment, making financial statement, and making closing journal. So, my advice to all my friends is that it is necessary to understand this accounting cycle because very useful later in the world of work as a transport, insurance employee, and so on, which allows companies to manage finance more efficiently and accurately, which is important for business decision and supervision. That's all my presentation today. If there is a lag, I apologize profusely. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.